So, a common question that I get is, can you pay insurance with a credit card? And technically, the answer is yes. But I'm going to dive in to show you why that may not be the best choice of payment options. And then I'm going to go through some different ways that you can save some extra money with the type of payment that you use. Hey guys, I'm Mark with Think Insurance, and this channel is all about saving you time and money, showing you the coverages that are best for you, but also giving you the best deals. So today we're going to talk about payment options. And there's a handful, there's about 5 or 6 different payment options that you can go with. Let's start with the main reason you checked this video out, credit cards. Most companies will allow you to pay with a credit card, however, there's a fee attached to that. Typically, it's not very expensive. If you're going to do what's called an RCC, that's reoccurring credit card, that's a typical basic monthly fee where you're going to pay about $2 to $3 per month extra in your monthly payment. Now, that might not seem like a lot, but most people lose their minds over the fact that they have to pay a fee. Essentially, that's in turn because a couple things happen when you have a credit card. One, that card expires, and when the insurance company doesn't automatically update it, then they're going to get a fee and they're going to have problems. Your policy is going to cancel. Now you're dealing with reinstatements. There's a service person taking time to do this. There's somebody calling you or reaching out to you to tell you it's canceled. Paperwork goes out in the mail, the whole 9 yards. So there's a cost on average that costs more for the policy, and that's why you're going to see that fee. Now that's actually now become the least common way to pay for insurance. And before this video is over, I'm going to show you the best 2 ways to pay and how they're going to save you a little extra money in your premiums. The other option is you can do a bill by mail. And that's perfectly fine, but it's very, very uncommon nowadays. It used to be that you would write a check out of your checkbook, stick it in the envelope, mail off your payment. Well, because everything's digital, it's kind of become a dead way of doing things because they don't want to pay for the extra stamp, the postage, dealing with all of the paperwork, printing off the paper, printing off the bill, getting it to you, and the whole 9 yards. If it doesn't get to you, it comes back. It's a mess. Now, they might not see as many cancels with that one because that's the common person that gets that bill in the mail, and they're used to that, and they like that payment method. They're typically going to fall in that same boat as the credit card where it wouldn't necessarily cancel because of an expiration date, but it might actually cancel just because of lost the mail or it's delayed or you just didn't think of it at the time. That one is actually the most expensive, not in terms of cost, but upfront cost. So typically an insurance company will charge you double for that first month. So you're going to pay 2 months up front and then you'll pay the standard monthly. There's most of the time a $5 service fee with those because that now involves paperwork, mail stamps, and all that. And you're going to pay for that. It's very uncommon to even see that anymore because now they do the most common way, which is called EFT. That's electronic funds transfer. That's a checking account. Sometimes a savings account, but most companies just use checking. What that does is essentially you're going to have an auto pay once a month, and that's going to come out of your checking account. And there is no fee with those. They waive the fees completely. There's no $1, there's no $3, there's no $5 charge. Doesn't matter even if you don't do paperless because you can still request physical copies. You're not going to get the paperless discount, which is usually about $1 a month, but you're not going to have to worry about not seeing the physical copy. And what some people do to kind of trick the system is they'll open up a separate checking account and just put the funds into that account for the exact amount. The reason they do that is some people are afraid that they're going to have an overdraft. Because commonly what has happened in the past, if you're bad with your finances, I've been in that boat as well, and you don't really plan things ahead and something changes. Now let's say your insurance goes up $8 and you didn't plan for that extra $8. You were down to the penny, that overdrew you. You've got a fee from the insurance company because it's a non-sufficient funds. It's a check refund. They now want $25 on top of your payment, sometimes $50 on top of that to pay it back, and your account's overdrawn and every day you're getting charges. So what people are afraid with those ones is that could happen. If you're in that situation, that's what they most commonly do is open up that second checking account so that it isn't tied to the primary checking. If it goes negative, it just stops and doesn't make the payment. The last way that people pay for insurance is more of a home insurance thing, is they have an escrow account through their mortgage. And their mortgage pays the entire bill up front. They just write a check, mail it to the insurance company, and then you make payments to the mortgage. Well, the two ways that I would recommend is the EFT. I don't even ask anymore because 99% of the time people are used to that. The only time it makes a benefit is if you're going to go with a company like AAA. You want to do both because the EFT will be your monthly payment on your auto, and then their AAA membership is actually better if you put it on a credit card. The second way is actually not the payment form, it's the payment type. It's essentially paying the policy in full. They call it PIF, paid in full. And if you pay in full, you would be surprised, depending on the company, how big of a discount they give you. If you're going to use a credit card, sometimes it's cheaper to pay the interest on the card and pay your insurance policy in full than it is to pay the monthly payment on the car insurance. Even the policies that allow you to go 6 months, sometimes they allow you to break those 6 months into 2 payments without losing that discount. Other companies, they say you pay in full or you don't get your discount, and so you can even bump some of those companies down to 6 months. There's a little bit of a risk there, so if you have a ticket or claim in that 6-month period, then on that 6-month hit, you're going to have an increase in your rate, where on those people that have the 12-month policy, you're not necessarily going to have that increase because they can't raise your rate until the following term. Now, it's very rare that you see this, but there are a few companies out there that don't like credit card payments. So what they do is if you're going to choose that credit option, they're going to do a bi-monthly payment. So you're going to pay 2 months today, you're going to skip a month, you're going to pay 2 months, and you'll skip a month. It's very confusing. I am not a big fan of that way just because I've had a lot of people cancel. It's tough to budget that if you're not really great at budgeting. So I would recommend, if that's the route, try to find a different way or a different company to go with. I'm almost curious to see if I'm going to sit here within a year from now and tell you guys that the 6th way to pay is with Bitcoin. Let me know what you guys think in the comments below. What method have you chosen for your car insurance to make the payments with? Did you get any type of discount, and what route did you find was the easiest for you? If you guys are interested in more videos like this, don't forget to subscribe, turn the bell icon on so you don't miss any of the future content. Otherwise, there's some videos here for you guys to watch that may relate to what you're looking for. Otherwise, I will see you guys in the next one.